Welcome back. Well, another good, lively discussion in today's episode. And a couple of points of interest to me were, James, we talked about the Chinese currency. What's it going to mean, really, for our farmers here?
I think very little initially, because the Chinese are going to be pretty careful about how they do float it. Previously, they have looked at floating about 5 to 6% a year. So, over the short term, it's not going to have a big impact on commodity prices and, in turn, the demand for exports from New Zealand. But, in general, it's going to be pretty good for dairy prices over a longer term, and it should sustain sort of demand for dairy. I mean, I guess when we're looking at the Chinese economy and their demand for our dairy, then it's always a good thing, and it's a good thing for payout because we've seen a big increase in exports to that country, and for a Chinese consumer that's coming from the rural into the city, then they're starting to get dairy into their diet, and this is their new base. For us, then it's dairy prices are pretty expensive right now, but they're coming in and thinking, well, $4,000 per tonne for whole milk powders, that's the new base, and that's my price expectation. So, we could see prices sort of sit around these levels for a good period of time.
And the interesting point here with the yuan appreciation, as James says, it's not about the short term. The long term is that it sends a signal that China is essentially shifting its economy from being a factory town, an exporter, to being more of a consumption place, so that consumers get more power because their currency is wealthier, and they get more income. We're seeing wages rise quite strongly in China. And as James says, we see a growing middle class interested in consuming the sort of protein we produce. That's great news in the long term for New Zealand's dairy and meat producing sectors.
Okay, Bernard, something you said too. You said that it's costing the New Zealand government $250 million a week just to pay down the debt, just to keep it at bay. And yet it's going to run out in 2 years' time. What's going to happen?
Well, that's a good question, and the government is wary of this. They know for right now, New Zealand's getting away with it, if you like, of running quite high net foreign debt position because we have relatively low government debt, and because we're seen as connected to Australia, which is connected to China. And so the rest of the world says, hey, you're not as bad as the Europeans, you're not as bad as the Americans, we'll keep lending you the money. That's fine for a few years, but the government is aware that it needs to control that debt and not be borrowing so much in 2, 3, 4, 5 years' time. So it needs to keep cutting spending, or at least cutting spending growth, and get that under control. Because New Zealand has quite a high net foreign debt, not so much the government, but in the overall economy, particularly the household sector. And unless we get that under control, someone is going to ping us in the end and say, hey, you're almost as bad as Greece, we better grab hold of you. So the government is right to say, let's get that under control.
Where are they going for their money at the moment?
Well, the New Zealand government really can't borrow too much from local savers because they're busy putting their money into bank accounts, and the banks are chasing that money too. They're having to go overseas. They're having to go to the big pension funds, and in some cases to government funds to get that money. It's interesting, there has been talk in the recent weeks that central banks and others will look to invest in the Canadian dollar and the Australian dollar as alternative reserve currencies. There's been this big concern, particularly amongst the Russians and the Chinese, that they put all their eggs in the American basket up until now. Maybe they need to look somewhere else, currencies that are more exposed to commodity prices. So they're looking at the Canadian dollar, the loonie, I love that name for a currency.
I love it too. And
the Aussie dollar, and the New Zealand dollar, of course, rises on the coattails with the Australian dollar. So that's a good sign in the long run, although as an exporter you don't want to see too much demand for the New Zealand dollar.
All right, we've had a fantastic discussion today. I always love hearing your insights. What's hot and happening in the coming week? What should we be watching out for, James?
Out of the US, and you mentioned the unemployment figures, and that's always going to be a big one to watch out of the US, and a pretty good driver as to where equities are going to go. And of course, where equities go has a big impact on the New Zealand dollar. So that's going to be one to watch later on this week. The US economy is always seen as a barometer for the global outlook, and you know, there's some suggestions that it might increase, and consumption in the US is very important, and it's still relatively weak, so that's going to be one to watch.
Okay, Bernard, how about you?
Well, this is the week which is the end of the financial year for many people, and in particular allied farmers. The South Taranaki-based farming services company, it needs to renegotiate a loan with Westpac, and we'll see by the end of this week whether it's managed to do that. Also, South Canterbury Finance has said that it will bring in an international investor sometime around the end of the financial year. So we should know by the end of this week on those two finance companies how they're going to fare. It's a key time, the end of the financial year. Everyone might remember 2 years ago, at this point 2 years ago, finance companies were falling over as they looked at their books at the end of the financial year and decided it's not so good. So we'll watch there.
Watch this space. That's all we've got time for today. Thanks to my guests, rural economist James Shortall from the ASB and Bernard Hickey from interest.co.nz. Now, we love to hear your feedback, so please go to our website and drop us a line and check out my weekly blog. We'll see you next week.